Good afternoon. This is Chris Brecher with a simpler stocks free video for April 15th, 2016. As you see, it's about 4 minutes before the bell. Today was one of those consolidation days. Basically, we have the ES down all of 0.5 point, NASDAQ down 2.5, Russell down 3, transport's not doing much, up a little, up 23. You had China up a little, the DAX up a little, advanced declines negative all day. Just much ado about nothing. What you're going to get today, which is very interesting, is you're going to get a lot of DOJIs, whether it's in individual stocks or whether it's in the SPX. Now, what do I mean by this? People that are new to the service, I don't know if you really, or to the free video, I really love DOJIs. I don't profess at all to be an expert with candlesticks. There are very few candlesticks that I find really reliable, but one of them, DOJIs. And the whole idea is this is an indecision candle. You had one here on the SPX on a daily. You had one 156 minutes ago on a 78 minute. These indecision candles are a big deal. It's always the period after that matters. So you notice on the right, the second it got under it, we just stayed down the whole time. This one on the left, are we going to continue up now because we've had this big move? Or does it culminate in a doji? The next couple of days of price action are pretty big. Other thing that's interesting in here is where did the doji end up today? Right at resistance. That's exactly where you should get a doji. You get indecision right at prior resistance. So very interesting how that happens. Now, I know there are a lot of chart services that go on, Fibonacci. They go on Elliott Wave. They go on pivot points, but let me just tell you, I look at a lot of different ones. Any one I can use to make me money, great, or to make you money, great. But the whole idea is I look at different support and resistance differently. I look at moving average, I look at ATR trailing stop, and I look at price. Price support and resistance is always more important in my opinion. One is that's because, like right here, when you had the big reversal, sure enough, that's capped this rally right now. It's amazing how those things work. Even back here, when you had the sell-off, you had the rally, which was also a doji, culminated in a doji, had another sell-off. We meandered around this area before we finally broke up. That brings me to the next thing, objectives. Look on the left and look at this W. You could call it inverse head and shoulders, or like I like calling it a Stewie pattern. So it sort of looks like Stewie. Or you could call this a W pattern. But any way you look at it, you measure this. You measure right here 1810 to 1950. That's 140 points. From 1950, get you to 2090. We're at 2081. This is an imperfect science. I could have added or subtracted wrong, but it's close enough that the objective has finally been met. And then isn't it ironic that we have a doji right at the top of that? Very interesting how that works. Couple of other things I want to go, like now, what do you think happens now? Basically, you're still above every moving average. You do have the dojis, that's something to watch, but if I'm even thinking of initiating a short trade, I'm waiting till something crosses. As you see, it's above every moving average here. I would have to go to a shorter term chart, but realize that if I do trade, like on this tiny little ledge, it has to be very short term in duration because the longer term charts still look okay. But I'm definitely going to keep that in mind. A couple of things I want to talk about is some of the trades that have worked great. We were talking on the premium chat about XON. We were looking at the biotech stocks, and what we're looking at in here is you first always go to the index. Look at a daily chart of the IBB, that's the biotech ETF, and look at it on a daily on the right. As you see, it's getting overbought on a weekly. No doubt about it. It's under most moving averages. Sort of a danger zone. On a daily that it rallied and got overbought, had a squeeze to the upside and sort of working off the overbought. So temporarily this could have a bull flag that gets you into here. But you got to keep your finger on the trigger because of the overbought on the weekly. What we were discussing on the premium chat and the live premium chat and also in the forum was, are there stocks like the IBB on the right that instead of going down to their moving average, they just formed a tighter pattern? Number two, are there some that don't have this bearish weekly pattern but have already made a higher low? So when we went through that and we posted this as XON, I only found this ironically because I was looking up Exxon and I put in XON by mistake. But if you look on this, look at this inverse head and shoulders forming even on a weekly chart. Look at the squeeze forming on a weekly chart, and look at the daily chart looking pretty darn good. And sure enough, since we mentioned it, we mentioned about 33.5. Why is 33.5 important? Check out the doji. Look at these dojis in this. Here's a doji here, follow through day under here. It went down for about 2 weeks. Now we had a doji down here. We had a follow through to the upside. Went from 33 to 38, 5 points in 2 days. So definitely watch weekly charts. Definitely watch dojis. But realize that when you see a constructed weekly chart, it's easier to buy daily dips. No doubt about it. Just so you know, tonight we have a free seminar by a friend of mine, Tucker, who is doing this. Let me show you on here what we're doing. Like first, you know we have a $7 30-day trial. It includes an hour of the premium chat in the morning. A lot of times we have free classes like once, almost every week. We're having one next week where I basically go over 15 to 45 minutes about, let's say, ATR trailing stop or unusual option activity. We're doing that next Wednesday. That's free as a subscriber. So you should really think about that $7 30-day trial. It includes the chat room, the charts, a lot of things. But this is another thing. This is just a free one called Why the Trend is Your Friend with Tucker. And that's tonight, Thursday, from 7 to 8 p.m. Central. And you just you go into Simpler Stocks, and there'll be a link for it. Next thing in here, notice the $7 for 30 days. And like I said, we've had thousands of people take us up on it. It's been a blast. So everybody take care. I will talk to you tomorrow.